Welcome to it. Time to have a look at what is happening on the Asian side. Starting off with markets on that particular front, they did manage to decline, and this is as a result of the rout in China, as well as the mixed response that we got from some of the U.S. major tech companies that reported earnings. When we look at what's happening on the Hang Seng side in Hong Kong, that managing to go up 1.5%. So Chinese stocks listed in Hong Kong, basically they were the ones who bore the brunt of what is happening in the recent sell-off. They managed to close a little bit higher today. When we look at what's happening on the mainland side in China, those stocks are closing a little bit lower. The Nikkei also following suit, down 1.4%. Looking at things on the European side, markets on that particular front edging higher. Again, on that side, investors are focusing on the slew of corporate earnings coming in. As we look at U.S. futures at this particular point, bit of a mixed response, and investors focusing on the FOMC interest rate decision that we are expecting, as well as an indication as to where we could be going in terms of monetary policy, looking for clues in that Fed statement that we are expecting. But to talk to us about some of the themes playing out, we are joined by Michael Traherne from Vestec Asset Management. Michael, thank you so much for your time. Let's have a check-in on the JSE, because yesterday, not so much of a pretty picture, especially when you look at what's happening with Naspers and Tencent and China.
Sure. It's been a rough week if you own Naspers, which most large investment firms do. I'd say it's probably one of the biggest holdings in just about all pensions in South Africa. So if you got a pension, you've owned Naspers, and it's been a rough ride. Thankfully today, Naspers and Prosus both up more than 3%. If we have a look at what was happening with Tencent this morning in Hong Kong trade, it opened well in the green, then dropped 4%, and then climbed its way to be up 0.2% by the close. So our market's definitely following on from that. Let's see what happens for the rest of the week, though. It looks like the fear around too much intervention from Chinese authority, that risk isn't going to go away anytime soon, and it probably means that the big weights of Naspers and Prosus are going to struggle to see a recovery in the ground they've lost over the last few days, but also over the last month or so.
Let's hone in on that, because we saw some U.S. funds dumping some of their holdings in Chinese and Hong Kong assets. Is this something that you believe, that when we look at what's going on in China, that we are going to see more increased control, that this is just the beginning?
It's always tough to know what the end plan is from the Chinese government. I think the U.S. funds that have been selling, it's more a knee-jerk reaction. But the news that we got over the weekend of increased regulation in the education sector saw the listed education funds drop 70%. And that definitely spooks markets, and that's why we've seen some of the big funds sell now, ask questions later. This isn't the first time we've seen increased pressure from Chinese authorities. It's almost a case of they're going to flex their muscles to make sure that everyone knows who's in control. And once business leaders reaffirm their commitment to the greater Chinese cause, the pressure seems to dissipate a bit. It is worth pointing out that the likes of Tencent and Alibaba have been able to become world-dominating firms because the Chinese government has prevented competition in China. So having government control is both a good and a bad thing. I think as an investor, it's something you just need to be mindful of, and then decide if you want that increased risk.
Let's talk about the Fed policy statement today. I mean, how important is it?
It's always important. I think in this very low interest rate world, the market's always trying to get hints about when will interest rates go higher. That's obviously led by the Fed's reading of inflation in the US. The current stance is that the high inflation numbers that we've seen are just temporary, and that once this has worked its way through the system, the US will go back to being a very low inflation environment. Of particular importance is tomorrow's press announcement will be how much QE is the Fed going to be continue doing? How much how much we're going to spend on a monthly basis buying corporate and government bonds? Because that at the end of the day is driving liquidity in those markets, and it's driving the interest rates down. So that's very sensitive to the market.
The moves we're seeing in U.S. bond yields, is it purely cyclical, or is it a Fed element to it? How are you making sense of what's happening on that side?
Yeah, I think it's both. If the Fed's buying $120 billion worth of bonds each month, that's definitely going to have an impact. But at the same time, in a deflationary environment like we're seeing in Europe, a very muted inflation environment that we've seen in the US, bar the last few months, that's definitely a cyclical thing as well. Technology has brought it to a point where lifestyles are getting cheaper instead of more expensive, and then that has a knock-on impact on general prices throughout the market. And if you're seeing low inflation, you then see low interest rates. They are very, very closely linked.
Yeah. Before I let you go, let's have a fun question. We often talk about the FANGs, and the FANGs being Facebook, Amazon, Apple, Netflix, and Alphabet. Which of those have an interesting chart?
I think they're all interesting because they all go up a lot. If you've owned any one of those stocks, it's been a really good investment. Obviously, the different time frames matter. For example, over the last 5 years, Netflix is the winner in that lot. But over the last year, it's by far the biggest loser because it's only up 6%, where the likes of Google's up 83%. So I suppose your timing matters. But with these big tech stocks, if you got in early, you're smiling all the way to the bank.
All right, Michael, thank you so much for your time. That is Michael Traherne, is a portfolio manager at Vestec Asset Management, talking to us about, his take on the market so far, and also giving us his input on those FANGs. But we're going to take a quick break, and when we come back, we'll